Hello, today is Saturday and it is the 12th of May 2012. This video will have silver on multiple time frames as well as the silver to Dow Jones ratio. So let's get started. And we're looking at the daily chart within the silver price. When the price action hit 30 a couple weeks back, that was a situation where it was both bearish and bullish for there to be a bounce, and sure enough, the market did have a bounce. For it to be bullish, you really needed to see a couple things, either one of a couple things happen, and that's A, extend the gains further than it did, or successfully find support at either A, retracing in or around 61.8%, that didn't happen, or maybe hit the level a second time and then do it later on. Again, that did not take place. So over the last 4 days to see the outcome that we have seen, that should be enough right now to just be a little bit weary of further downside action to be coming. Now again, it's a little oversold on the short-term time frame, which why it's a little leery that any rallies that bring us back up to 30, which was support in here, it was also expected support in here, it would be expected resistance the next time that it comes into play. On the 3-day time frame, it's been a long time since I've shown this chart. And the Fibonacci highs and lows are from this high and this low. So since it's first made that 26 test, it has mostly, or pretty much the entire run, has been in a bear market situation. Anything below this line is bullish. Everything above here is, everything below here is bearish. Everything above is bullish, and it hasn't even been above this level, which is why I've been stating for this to really get going, it's got to hold and stay above 40 for a decent amount of time. Now what's concerning on this breakout in here is that after having a second test within this level, it broke through this resistance in which that it established, and it made a run very somewhat close to this level, and obviously didn't find support, showing one huge failed breakout. And well, from failed moves can oftentimes comes fast moves, which is what the case is here. The previous low is 26, which would be a third test of it if that was to come into play, where if we go up to the 30 level and show a pattern like this, the odds that we do have a test again of 26 is quite high, to say the least. And normally on a paper market, if I'm looking at a chart pattern that looks like this and it's coming down to 26, I'm in no major rush to be buying whatsoever. In fact, I wouldn't be buying. Now, in the physical silver market, a move to 26, it would be just a little bit tempting, to say the least, to get in just a little bit. But at the same point, the more often you test a level, the more likely it is that you take it out. Let's move this on now to the weekly chart, which is just expanding out a little bit further. And the dangers when we see this of breaking below 26 would tell us that the move from this breakout low of 17 3/4 in late August of 2010 to this move up here would be that of a failed move, because if it retraces 61.8% or in or around that area, then that's enough to keep that as a correctionary move, which is why if it does get going, pretty much breaks above the 40 level in here, that we're ready for the big plays to come into tuition. Let's take a look at this on a 9-day time frame, which would take us back to 2008. And right now, I'm going to focus this one within the 18-period average of closes, highs, and lows. It's a front-weighted average. And the front weighted means it puts more emphasis to more recent time frames. So unlike a simple moving average, which calculates each period equally, this one does not. And it's been holding up this 18 average of lows for the last month plus or so. And just this current period, it's really now breaking down below. This 18 period average of highs and closes isn't a downtrend. The 18 period average of lows is pretty much sideways, but continued downside will have it starting to streak down towards the downside. And breaking down below this level brings us to the next significant previous resistance level in roughly around 2021. And I don't like to give investment advice by any means, but I can say right now that a move breaking down below here, if you haven't seen any time yet to load the boat, then I don't know what else you'd be looking for. Now on the monthly chart, and again, this is just breaking down a little bit, because we can see that this 18 period average of highs is just now starting to go lower. The 18 period average of closes, same thing as well. It's been in this correctionary phase for quite some time, and it's been enough for it to say, okay, we had a down move and then another down move and a sideways move. We're ready to get going again. And if it doesn't hold this level and breaks down below the support level, then this is the previous line here, which is the Fibonacci from, and this is automated, but it's pretty much all the same, the low of 544, which really about 4 even is a better low, is in within this previous high and this band of resistance in a range of about 18 to 21 per ounce. But if you would have asked me a long time ago where I would have guessed the price of silver to be, we'll just even say back in here, I would not have predicted this to take place. In fact, this is not anywhere near as an official prediction. I just made this chart up yesterday. But this would be an idea of what a situation that I probably would have expected more. And I'll tell you why it wasn't even close. So we're back in 2008, so right back in here. And the move that I would have predicted was something around 50 and then maybe go sideways for a little bit, go higher, and then have a correction from, like, say, around a little over 200 down to about 90-ish or so, and then showing what now would be a very bullish scenario. What I forgot to really analyze, or what I was unable to determine, was how people would not understand what is extremely simple, and that of what a fiat currency is all about. And when you have central banks that monopolize such a deal and then have all of these major loans with large interest, the derivative market as toxic as it is, that people would do something about it. And then I guess, like, May the 11th, I'm thinking the date is, and today's the 12th, so I guess it's the anniversary of the year 2010. I guess that's when I realized I was kind of complacent in thinking that people would figure this type of stuff out. Because after the flash crash of 2010, well, that didn't really shake too many people out or wake people up, which would be really, I think, would be the more important part. Okay, so let's just now finish this off within the Dow to silver ratio. This is just a quick chart that I brought up, so I wanted to fix it up a bit. The first problem is this is a linear chart, so that's got to get fixed. I put the dates in, and there is what the chart looks like in a logarithmic fashion. Throw in some Fibonacci retracement. This is the 38.2 and the 61.8% retracement. We'll go through what the actual highs happen to be, so it's just moved down just a little bit. The actual high on July 19, 2001 was silver around 427. The Dow was 10,679. So the approximate ratio was 2,500. My computer is using monthly closes only, and I had 24.99, so quite frankly the same. And the approximate low for this was January 18th, 1980. Don't got the date written on here, but it's pretty obvious for most people who follow silver. When this occurred, silver was $50 an ounce, and the Dow Jones was 865, which makes the approximate ratio about 17 and change to 1. So from the time period of about a little over 2 decades, the value of one share of the Dow versus an ounce of silver increased, or silver decreased by more than 100 times, like 130 times or so. And it has come back down to the 38.2% retracement, but didn't find support there. Right now, it's actually finding resistance in at that level. So we'll just put in, say, a moving average now. This is a 50 period. It's a front-weighted average, or really 4 years and 2 months of the same ratio, which basically from the time frame of when it got going was instantly support on 1, 2, 3, 4 occasions with a little fake out move in here. And then lately it's been in a downtrend, finding resistance on several occasions, which is what's been going on right now. What's interesting to know about technical analysis, whenever you have retracements, what I like to do is you take the high of where it came down from and the low of where it settles in at. That's where you want to find 61.8%, which is always a little bit below it. When you start to notice that it's breaking free above those lines and things are looking good, that's when you know you may want to continue on playing within for another leg higher. So if you look at this one here, you got a nice little move in here stating, okay, we might go higher. You'll find the same thing in here, same thing here, same thing here. But then this one never really showed too much. So now it's the opposite. Therefore, you look at the 61.8% from this low to whatever this high happens to be. But for today, we're only going to take a look at this at a long-term analysis. And quite frankly, the stability, price stability, is just not that. It's not stable when you go from the areas of under 20 to 2,500. That's just not stable. So thank you for tuning in, and have yourself a magnificent weekend. Bye-bye.